So it's a Tuesday, the 20th of September, 2016. Another good day to wake up, roll out of bed, and trade Forex. Life is great. Life is grand. Life is good. No. It is great. Life is grand. Life is good. Yeah. Life is beautiful. Hey, let me remind you, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, thank you for being a client of TradersWay.com. There, I am the Chief FX Market Strategist. I do these strategy sessions for you with the overriding goal of helping you become a confident, skilled trader. Do these sessions 7:30 in the morning New York time, a couple hours before the market opens. It's also approximately London lunch. Good time to realign our satellites. Once again, thank you for being a client, and also thank you for posting your trading ideas and analysis on Forex.Today. I think the collaboration is awesome. You are great. You are good. You are beautiful. So let's make it grand. All right. I just want to start here because it's in front of us. Hopefully you can see the charts all right. Let me get my drawing tool. Yesterday we talked about having a bias. Trade your bias. Makes life easy. There's no reward for making it complicated. And you can see what happened at London Open today. It went up. And then it went down. Not a problem. Why is it not a problem? Remember, I joked yesterday that crybabies will cry that, oh, the market whipsawed me. Oh, the market whipsawed me. It's not fair. Somebody took advantage of me. The market whipsawed me. What is it? You're either a bull or you're a bear. This is London Open. Be ready. Look. Bulls bought it between the M2 and the daily pivot. That's what they're supposed to do at the London Open. And then the bears sold it at the reversal pivot point area at the London Open. That's what they're supposed to do. What do you make whips up me? No, come on, dude. You either bought it and made money or you sold it and you made money. And everybody else just got slaughtered. Yeah, I like the whipsaw song. That's a coda. So it's just like, no, the market didn't whipsaw. You were standing in the middle of two freight train tracks, one going north, one going south. Somebody's going to run you over. Probably even both. You got it? Point made? I told you I'm in a pissy mood today, so I apologize right off the bat, and I'll apologize again. Sorry, but there it is. Don't mean to make you upset. I mean to make you a better trader. So maybe that's reality waking up, huh? Wake up and smell the concrete. Life is great, life is grand, life is good, life is beautiful. I seem to remember doing this yesterday as well, didn't I? I did this with Ryan, right? That you could do it from the higher, you fib the higher move. try to catch the, you know what, I did do this for them. Yeah, for the South African crew. Yeah. Easy peasy lemon squeezy. Cool. Right on. Everybody's doing what they got to do. So that's that. Yeah, okay, so I want to move on to something else, but that was just a great follow-up to yesterday. Have a plan, have a bias, trade it, life is easy. Don't have a plan, don't have a bias, have no idea what you're doing, life is complicated. You choose. Aight. Aight. Go. So, one of the things I want to talk about here, let me move it over to this other screen, just easier. Deep breath, deep breath. Reserve Bank of Australia September meeting minutes. Now, I usually don't like to go through them because I kind of want you to do it, but I didn't read them yesterday, so I'm going to update myself, so I might as well share it, right? That makes sense, right? Policy stance is consistent with meeting CPI target over time. So that doesn't sound like they want to change policy. Domestic cost pressures likely to stay low for some time. Lower Aussie continues to support activity in traded sector. Demand uncertainty still weighing on non-mining investments. Conditions in the established housing market had generally eased. Home price growth moderated. Oh, snap. What were some of the things I threw out yesterday? That they're probably worried about the low Aussie creating inflation, but also driving up home prices. So therefore, maybe they don't cut anymore. Well, they just said conditions in established housing market, aka existing home sales, had generally eased and house price growth moderated. That doesn't sound like they're worried. So it kind of feels like, well, they don't need to cut interest rates further, but they could. Reiterates, however, rising Aussie dollar would complicate economic rebalancing. That sounds like they don't want a strong Aussie dollar. Does it sound that way to you? A rising Aussie dollar would complicate economic growth. Lower Aussie continues to support activity. Housing sector's not a problem. We could cut interest rates even further, driving down the Aussie dollar, which won't hurt anybody. And we're not worried about a bubble in the housing market. Interesting. Seen some signs of improvement in parts of the mining industry. Household market indicators point to weaker conditions compared with a year ago. Housing market indicators point to weaker conditions compared to a year ago. Household market indicators. Household market indicators point to weaker conditions compared to a year ago. That doesn't sound hawkish, does it? Does that say, oh my God, we have to tighten monetary policy as fast as possible because household conditions are weaker than a year ago? Whoa. So let me read into this. If household conditions are weaker, they need support. The lower Aussie seems to help the mining industry. Rising Aussie dollar would complicate economic rebalancing. We don't have to worry about a bubble in the housing market. And a lower Aussie seems to support activity. Seems like nothing, we don't need to do anything today, but if we had to do something, we would cut, doesn't it? Isn't it kind of like, aren't they loading the shotgun for next year? Sharpening the samurai sword for interest rates? I don't know. Low rates help economy absorb business investment decline. So if the current low rates are helping absorb business losses. Why? Businesses borrowed debt when the Aussie, right? When the Aussie dollar was expensive. They borrowed money at 90 and now they pay it back at 75. Same Aussie dollar. It's just cheap. So if you had to lose money, right, you borrow expensive money and then you pay back your debt several years later with cheap money. Sure what I'm talking about? So anyways, that sounds like they're building a helicopter pad for helicopter money. Not that bad, but that sounds like they don't need to cut today, but they could.
Clock hour here in New York coming up on 1200 GMT. Overall, the sentiment for trading, equity trading in particular, remains solid coming out of through the European trading session. The DAX is holding your session highs up about 0.75%. The FTSE up better than 0.5%. The CAC up about 0.4%. The Euro Stoxx up just under 0.5%. This follows a little softer trade in the Asia Pacific session. The Nikkei, the Hang Seng, the Shanghai all finishing down marginally, while the Australian stocks were up less than 0.25%. Markets again largely in a holding pattern ahead of these big central bank meetings, Bank of Japan and the Fed. We'll see the Fed decision tomorrow. We've seen this drift upward in equity markets, while bond markets have firmed across most of Europe, Japan, and here in the U.S. The long bond now up 0.5 point, the 10-year up 6 ticks, the yield falling to 1.69%, down about 2 basis points in the U.S. 10-year. In Germany, the Bund future continues to hold near session highs of 1.
Boom chalakalaka.
419, and the yields there lower by 3 to 4 basis points across most of the continent. We've seen some weakness in British pound. Cable falling through the 130 mark. Appears to have induced some technical selling. 129.65 down 0.5% or 62 pips, but off the 129.53 low, while the euro and dollar yen hold close to unchanged on the day. In terms of data, it's been pretty light. German August PPI did come in lower than expected, at minus 0.1% month over month, and at minus 1.6% year over year was in line with expectations. The Swiss trade balance for the month of August also is largely in line with expectations at 3 billion Swiss francs. As we look ahead to the rest of the New York pre-market and through the European close, we do have only one notable data point here in the U.S. U.S. housing starts and building permits for the month of August will be released in about a half hour's time, 8:30 Eastern time. We're also going to get Belgian consumer confidence reading at 9 o'clock Eastern time in a little more than 1 hour. Just note here at the top of the hour, 8 o'clock Eastern time, we're on the lookout for one central bank rate decision. The Hungarian central bank is expected to leave their main rate unchanged at 0.9%. We'll also be watching for any commentary from the NBH on their quantitative limits for their 3-month deposit facility. Oil futures currently trading lower on the day, 43.41, and now the more active November contract down about 1%. We've heard a couple times from OPEC Secretary General Kindo speaking in Italy ahead of the Algiers meeting later this month. Natural gas futures moving back towards that $3 mark, 297, up 1 1/3%. And the high from late June, early July was just above $3. We've come up and close to tested it a few times throughout the summer and holding right near the recent 3-month highs.
You always end so abruptly. All right, so I guess that's it. TradeNews.com. Thank you. Rumor on the street. Let's talk about Bank of Japan. Likely adjust their policy framework this, yeah. So for me, it's tonight. For you, might be tomorrow. BOJ is going to come out. Because of limited progress on inflation, the Bank of Japan may be forced to abandon its 2-year target time frame and switch to a longer view. Kind of feels like they're going to admit it ain't working, right? Bond purchase program may change to one. The more flexible approach given the risks associated by maintaining stimulus effects. An option is to reduce JGB purchases when conditions allow for that to happen. Negative rates are expected to be the centerpiece of the Bank of Japan future policy expansion, but because of their negative impact on the financial sector, the BOJ will need to communicate consideration of side effects. One option is communicating it will prevent downturns in super long interest rates. Huh, whatever. Bring it out. Let's see what the market does. So I think it's better to admit you don't know than to pretend that you know and be on the wrong side of the trade. So I hope it weakens, but don't be shocked if the yen skyrockets like a rocket in the sky. Yeah, I was a poet. Yeah, it just comes natural to me. All right, so how about this? The New Zealand Institute for Economic Research. NISA. Anybody read that report? All right, let me do it. Okay. The board did some research and they believe the Reserve Bank of New Zealand should keep interest rates at 2%. With an easing bias, but don't cut. Okay? I am in a Kiwi trade, as you know. Life is great, life is grand, life is good. Wow, we got to really go back now, right? There it is. Let me clean this up. Beep, beep. Okay, so I'm down here, as you can see. Boom, 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 boom. Full disclosure, I bought it several times in this move and got knocked out every time. Almost tried it again last night, but I'm in a bad mood, so I missed it. So maybe that's why I'm in a badder mood. But this is supposed to go up, as you know. It looks good to me. I don't know if you're going to like pile on the second wave here, but it kind of feels like, well, let's go this way. Getting close to support, found support, found support, found support, right? Higher high. Ooh, what? Higher than this high, higher than that high. We're up into this area, so we're not on the free and clear. But what I'm hoping for next is something like that. And then, of course, we've got to get past this area. Okay, but each one of these dips now and the one in the future that hasn't happened yet, which would have to happen after the high, which hasn't happened yet. But, you know, you start building up again, right? Yeah. James, oh, the whipsaws, but they're not whipsaws, right? So how do you catch a falling knife when you're not sure what side has a handle? Thank you, Miles. Good call. So it's just like you do things like I think I bought in here and got the 100% retracement. That sucks. Oh well. And then I think I remember I was at 74.50. You know what? That might have been it actually. I think I did this one. And then it came down, right? Yeah, you know, something like that. Actually, 74.50. I'm just going back by memory, but now I can see it. Okay, I kind of remember. All right, I remember now. I was taking shots last week at this. This is all about 74.50, right? So every time it bounced, like not here obviously, but I don't know. This one I believe I caught, and probably this one, and I was probably in again here or something. But I tried a few times, not these lower ones. But now, you know, hindsight is so wonderful. Oh, well, it was triple bottoming off of the central pivot. All right, good. But I was playing this last week. Whatever. So now, though, I think it's interesting that we got this in play, right? We got the monthly, we got the weekly. M2 predicts M4, right? And we got our higher high now here, and even here. So, you know, the theory for the week, if you were to have one, if you were trading for the week, right? The theory would be at basically like that, right? Now we got so much fundamental news that could just go like straight to here, but it also could go straight to here, and all that matters is I can't lose money, and I'm already up 15% or something. Freddy boy, you don't feel the BOJ will do anything? Well, first of all, I don't know. Second of all, what are they going to do? And so let me try to give you an intelligent guess. Based on my experience and my understanding of Japanese culture, you do whatever it takes not to admit that you made a mistake. Well, I don't know about that. You tiptoe around it, I think. So I don't think they're going to say negative interest rates aren't working. They're just going to say, you know, I don't know. But I think they will address the. I think they will. I think they will change their target. They'll say, yeah, we're on. You know, we're making good progress for meeting our inflation target. We just need to double the amount of time required to hit our target. Like, well, if you're making good progress, why would you do that, right? So that's not lying. And then we got this issue now. First of all, what do they buy? The Bank of Japan now owns almost 50% of every company in Japan. No joke. I think like 30%, right? They own like 30% of the Nikkei. I mean, it's like wowzers. Holy smokes, right? and all that kind of stuff. So anyways, the negative interest rates are in their point of view are helping some things. And remember, about 2 weeks ago, we looked at the spread between the 2-year and the 30-year Japanese government bond. Yeah, we did. So I don't know, maybe in their mind things are starting to work. I don't know, and that their negative interest rates had something to do with that. Maybe, I don't know. So hang on, I got the news. So they do mention. All right, Hungary left interest rates the same, unchanged. Wow. So they admit that there are some downsides to negative interest rates, and that they're going to think about, because remember, they did their big study. So they're going to say, look, we didn't make a mistake. That's first and foremost. And they're not necessarily going to say it's working. They just didn't make a mistake. And that there's some downsides, and they're going to address them. CLS, I don't know. Ask them. Maybe it's because you have a small account. I don't know. Like I was saying before, whenever you have let's say $1 million and you want to fund a Forex account, you can call any broker on the planet and say, I have $1 million. Can you give me a better deal? And you'd start negotiating. Right? When you pop in $150 and you're like, how come I can't get a full swap? Well, the broker's got to pay for the costs of running a business and moving around your 22-cent trade, right? So that would be one way, because you're not going to, what are you going to earn, 1 penny interest? I mean, they can't even, you know what I mean? Like, I'm not even being facetious, and I'm not trying to be insulting, but what is the interest payment on a $2 trade, right? So you can't even get a penny, right? What is it, a penny a year? So it's complicated on small on small accounts, and obviously complicated means expensive. I'm a businessman, so complicated means expensive. Complicated means it's going to break. Complicated, not good. Expensive, not good. So anyways, it's a small account. Brokers got to pay the bills and keep the lights on and stuff like that. But there's very, very, very few carry trades anyways, right? So I happen to be long on this account, Kiwi yen, and I'm earning yield. I'm earning swap. Like I said, I have, like, let's say $1,000 tied up, and I've made like $150. It's not quite. I think it's like 125 right now, but I've only been in it 3 weeks, so I'm collecting the full on a standard. This is just a regular standard account, all that kind of stuff. So it's not a micro account. It's not a mini account. You know what I mean? So that maybe that's what it is. You have a mini account. I don't know. Give them a call if it concerns you and say, well, I'd like to beef it up from $150 to 150,000, and they'll say, all right, well, we'll give you a better. You should probably get out of your mini account, right? Something like that. But anyways. All right. I hope that makes sense. Like, there's no sales pitch. I'm not glorifying anything. So I'd rather give you the raw, honest truth, right? So again, I'm cranky today. I apologize. All right. So you look at this and you make a decision. If you're not on this, then you need to make decisions whether you want to be on it or not, right? Bup, bup, bup. So what's the plan, Stan? Maybe into here. So you could, I would look at this area here. I would look at this midpoint psych level since I've been long at 9 times. And then I'd have to look at this area here because you know that's going to be the future 21 and it's the role reversal. Right? So let me highlight midpoint psych level. Okay? Weekly central 21 and roll reversal, 21 being in here. Okay, but in the future it's going to be up here because it's moving, right? And then of course you could fib here or you could fib here. It's judgment call, right? Either way, I think if you're a disciplined trader, what you're going to look for is a basic move of here to here, Fibonacci retracement, up. And if it just keeps going through this resistance, it goes up and up and up, maybe the dairy auction's awesome. Well, then I get paid because I was in it before you. It's all right. Right? But you don't have to worry about me. It's like Paul Tudor Jones used to laugh when like other floor traders would come up to him like, what are you in? How big are you? He's like, it's always the wrong questions. Like, who cares? Right? It's what you're going to do next that's important. Classic. CLS, they're classic. Yeah. There were no other pivot points when I started that I ever heard of. So now there's like a whole cottage industry on pivot points. But I kind of feel like that's people selling you books. I mean, I don't really know. I never looked at anything else. But how about this? Let's do a quick study of reality. This is the monthly central pivot point. Okay. This is the weekly reversal pivot point. Do people seem to be using these monthly and these weekly pivot points? Right? Again, here's the monthly. Here's a pullback to the weekly. Here's where it stalled out at the weekly central. Now it's stalled out at the weekly M3. I think it'll probably get up here and stall out. I mean, the market is using these pivot points. Why would you need to invent any other ones? And how would that be helpful? I mean, I don't know. Maybe I should study them. Maybe they're brilliant. But it seems to me we started the week at the monthly pivot point. And it went up to the weekly central pivot point and stopped. So I've learned 2 things. Market participants use the monthly central pivot point and the weekly central pivot point. To me, it's a fact, right? Right? Now you're saying that you like the way the other ones work, then and I don't know because I've never. So think about it this way: why is it that I've been trading exactly the same way for a decade? That if you watched my first non-farm payrolls at FX Street 10 years ago, or if I taught you how to trade at FX Boot Camp 10 years ago, 9 years ago, 8 years ago, 7 years ago, 6 years ago, like nothing's changed. The reason is because I've never needed to change. There hasn't been a reason. I've found the Garden of Eden, and I ain't leaving, right? Well, it's not that I'm right. Don't get that. Don't whoa. He says, seems like you must be. Oh, whoa. No, that's not what I'm saying. There's no need for me to change. I'm just like an old man locked in his ways. I don't need no dang fangled cell phones. Yeah, so there's no need. But so I look at that and I'm like, why would I trade without these lines on my chart, right? Now you guys might be fair. Let's say newer people might say, "Wow, there's so many lines in here, I don't get it." Okay, and that may be the case. I look at this and I'm like, I had this line on my chart, right? Before price came down here. We had that line here last week. Okay. To me, that's important. And so, how do you trade without it? Right? Look at the response to that central. Right? Look at the response to the monthly central. Look at this response to this week's central. Right? It's just amazing. So, I like them. And there's a lot of people that say, history repeats itself. Now, I believe it's more of a self-fulfilling prophecy. Okay. So the other thing I'd like to point out is this line, monthly resistance. Okay, monthly R1 is the top of the market. I believe somebody sold there, and their intention was to get it back to the central. That there wasn't any 15-minute cycle. There wasn't an hourly pullback. There wasn't a weekly pivot point. That we might have had 9 or 10 or 20 or 30 trades in here. And statistically speaking, half of them were probably winners and half of them were probably losers. Maybe you made money, maybe you lost money, but the zero sum of it all, probably when you averaged it all up, nothing happened, right? But a big bank sold and had a target here. Okay. Now the funny thing is, I remember this. This is a weekly R1, monthly R1 cluster. That's why it triple topped. Okay. And I'm throwing out for argument, since there isn't a person, right? This isn't just one person. This isn't just one bank. It's not somebody that, I can call up and say, what are you thinking? So there's no right answer here. But, humans are great at sort of simplifying things so that they understand complex things. So like Goldman Sachs sold this and had the target here, and that was it. And they were done for their week. Okay? And maybe, just maybe, it's a round trip ticket. All right, so Paul asked a good question. Who did I learn pivot points from? Well, there was a Canadian, who was selling a course for like $1,000 or something, $2,000. And then you had to pay like, I don't know, several $100s a month to be his member. And every week he would give you the pivot points, or every day, I think it was just daily pivot points. He'd give you the pivot points. Now, he wouldn't tell you how to calculate them. You didn't get the formula, you didn't get the indicator, because really it was kind of around when there were barely even charts. I think it was around the time when your charts and your trading account were two different things. But anyways, you would have to log in for $200 a month. You would have to log into his website, and he would have the pivot points, and you would write them down on your charts. Well, I ain't going to pay money for that stupid nonsense. So, you know, probably the only time in my entire life I found this course on eBay, so I ripped it off, paid $10 for his $1,000 course. And I'm glad, because $10 was too much. And what it said is, pivot points are like flying an airplane. So you buy, I don't know, let's say, I forget what it was. It was really simple. Like, if it's above the pivot point, you buy it. Like, it was not even a strategy, right? But what happens if it falls and doesn't go up? You know what he said? It's like flying an airplane. Just turn them upside down. Do the opposite now. So if it's up here, you should buy. And if suddenly you're losing, we'll just sell. Like there was no strategy or anything. It was just like, if you start losing a crap load of money, just do the opposite. You don't need. So I thought it was funny. And you know what I said? Because I remember, by the way, I was on vacation. And I'll remember I had this cabin. It was called like the Eagle's Nest. And I'm like, don't they understand that was the head of the Nazi party? But anyways, they thought it was nice. So there I am on the Eagle's Nest, the top of the Canadian Rocky Mountains. Yeah, oops. If you know anything about your Nazis, you know, you're like, isn't that Hitler's little hangout in the mountains? But anyways, so no, there was no swastikas, luckily, at this cabin. But anyways, it was a nice cabin, you know, deer head over the fireplace, stone fireplace, wooden floors and wooden walls, you know, very Canadian. Beautiful view of this valley way below us, but we're way up on the steep mountain. It was really I believe it was the Great Divide. Incredible stuff. Radium Hot Springs, if you guys know it, where even though you're at this top of the mountain in the middle of the Canadian Rocky Mountains, it could be dead of winter. I was there in the summer. It could be the dead of winter, 30 below zero, snowing, and you can go into the hot springs and hang out in the snow. And then in the naturally warm water. Oh yeah, Daniel's been there many times, I'm sure. Yeah, it's not overly fancy. Canadians are not overly fancy, but you know, it's nice. So anyway, so I'm there on vacation. I remember waking up early in the morning. I got my cup of coffee, and I'm going to sit out on the deck and look at the valley below. Just beautiful paradise type stuff, right? And I'm reading this thing on pivot points, and I'm like, this is retarded. How stupid is this? I am so glad I only wasted $10 on this. And it makes no sense, and nowhere are pivot points defined. It's just like, and I'm like, this doesn't, I don't get what he's selling. I just don't understand. And this idea like, hey, if that don't work, do the opposite. Like, that is the worst advice ever. You know what I mean? So, anyways, I said, I threw it on the floor. I'm like, that's the last time I waste any money on that and stuff like that. I don't think I bought any other thing ever. I kind of felt dumb doing it in the first place, so I sort of reinforced my negative point of view. So yeah, so went back to doing it my way. But I will give him credit. I can't remember the guy's name, but nonetheless, Well, Jow says he learned pivot points from David Pegler. I taught David Pegler how to trade, so by definition, I taught David Pegler how to trade using pivot points. So anyways, I can't remember the guy's name, but I certainly don't trade pivots like he did, but I did study pivot points for, you know, a year or two or three. I don't know. I did study them by putting them eventually on my charts. And back then, I was using the GFT Dealbook platform. They don't have pivot points, so I paid somebody to develop the code to make pivot, make pivot points for me. And we popped them into the Dealbook. And so for a year or two, I actually had them on my charts. And I learned pivot points by observing how price interacted with them. Okay. Yeah, Rob was doing basically super high-end tech support. That guy was flying 300,000 miles a year. And when I met him, he's like, Wayne, I need Forex to work so I can get out of this extremely high-paying job that that removes me away from having a normal life. He says, I want to get married, I want to have kids, I want to like be home. And I said, no, right? Forex is the way. Kurt was like a scientist and an engineer with a business background where he could explain very complicated things. I think he was a Six Sigma ninja or something, all that kind of stuff. And we wanted to take his keen mind for statistics and apply that to the foreign exchange market, which he did wonderfully. Right? David Pegler was in the U.S. military as a South African and is discharged from the military and sends me an email. He's like, Wayne, I just got out of the Army and I don't have any money. Can I join FX Bootcamp for cheaper? Can I have a discount? I'm like, hell yeah. The guy shows up and lights up the room with his personality. Now he's a hell of a trader too. So we're all good guys. Yeah. So it shows you can also be successful. They were all successful in very interesting and different ways, strengths and weaknesses and stuff. So you can also be a success. Hey, Luis, did we meet up in like Vegas one time at a jamboree? No. Too bad, huh? Too bad. So anyways, that's just proof that you can be success, so on and so forth. All right, so how much time? Okay, just looking around. So that's that. Let's get into some other things. Okay, so plan that out. Make sure you know what you want to do with that. Are you gonna try with an Aussie later? You know, do you have, you know? You know, I don't know what happened to Rob. When he left, he kind of started competing service, and from what other people have told me, said a lot of bad things about me. So I don't know what that's all about. Or if not me, no, I shouldn't say that. About, I don't know, whatever. And then, but Kurt, I'm still in contact with, and he's gone on to be like the chief scientist at a firm, like pretty cool stuff. Is he living out in the wild, raising his kids? Well, that's cool because that's what he always wanted to do. So I'm glad he's out of LA. So good for him. Honestly, he and I sat down. We had like I think we had a 12-course meal one time when I was staying in LA, and he was there. And I'm like, meet up for dinner with me. And we just had a big, long conversation, and it was really nice. And, yeah, and he said that was his dream. He's like, Wayne, I spend all my time in 5-star hotels. I'm in Switzerland one day. I'm in, Argentina the next. Then I'm in Los Angeles, and then I'm in the UK. Then I got to go back to Argentina because they're screwing it up. Quick stop in Brazil. Got to get back to Switzerland to report what's going on, and then get home to LA in the same month. He's like, Wayne, I don't want to live in hotels anymore. I don't care if they're 5 stars. I want a house where I walk in and it feels like a home. I don't want girlfriends. I want someone to love me. I want children. I want to, he's like, I just want to surf and ski. So I'm glad he found his way. Good for him. Okay. Aussie. Let's use this one. Have you decided what you want to do with this yet? Cuts like a nah, Okay, I'm going to change this color. I like silver, to be honest with you. Wyoming, get out of here. Really? That's cool, man. Yeah, I'm glad he got out of LA. It's not an easy thing to do, but it's usually a good thing. Okay, so here's a big move here. Do you guys remember this? Okay. I want you to remember a pattern like that. Kind of kills an uptrend, right? Very violent moves on this. Down into support. Pretty obvious that there's support here, right? Violent moves. So based on this, however, there is a possibility of working our way up here. Don't forget about this zone. So it'll probably be more like this. And then you also can't ignore that. So I'm going to bring that down. So that does reinforce the pivot profit zone up here if you do end up doing this. And ultimately, the risk you face if you are a bull here is that you get up into this and it's a lower high. Okay. And, when I say I don't know what's going to happen when the BOJ lets out their news, one of the things it could do is both. Like it could just get up here in a heartbeat and then be right back down. So you need to decide what you're going to do now. Okay? If you're a bull and you get into this, okay? So let me zoom in a little bit now. Right? And this is what I'm trying to ask you to, make your decisions here. Are you going to try to catch this? Okay? And if you successfully catch it, meaning let's say you get in a little dip, your stop's here, you finally get through this area here, move your stop closer or near or at or on break even, and you're done. Okay? And maybe it gets up here. Maybe you decide you're going to take profit up here. Or you decide you're not going to take profit there, that if you get to this point, your plan is to be in it till the end of the year. And you acknowledge that it can collapse and knock you out. And you're just willing to accept that you don't lose any money, but you have a real opportunity. Plus interest, right? But also bear in mind that the BOJ does nothing, let's say, or does little of anything. And you get both cases where this heads up and then it immediately heads down because there's already bears there. 1.14 on the housing, a little bit low. Shouldn't be $2 strongish, but it doesn't look like the end of the world. So anyways, just be prepared that there are others that say, all right, there's no way that the Bank of Japan is going to do anything to really weaken this yen. So if it is up here, it's going to be way, the yen in this case is going to be way oversold, and they buy it. And that's really how bigger banks are thinking, right? Bigger players are thinking. If it goes up here, there's no way in hell it should go higher, based on their analysis. And so that's all I'm asking you to do as well. And that it spikes up to 78, and by Thanksgiving we're at 75 or 74. Okay? And that's really, I want you to think as well. You say, I ask you, what do you think about the Aussie dollar? And you're like, yeah, we're on our way to 70. And I sell rallies. I said, really? And you're like, yeah, I sold it at 79.50. And I sold it at, 80.50. And you're like, that's what I did last year. Every time it gets near 80, every time it gets near 80, I sell it. Oh. Time for an up move. Maybe you sell it again, right? I don't know. I don't know. What I want you to do is think about it, plan it, probably write it down on a piece of paper or post it on Forex.Today, and then be prepared to carry out your analysis. Well, hoorah! Once again, sorry for being cranky. I can feel it. I'm cranky. I'm gonna undo my crankiness. Let's play the happy song. Hang on. Let's put some positiveness. Life is beautiful. Life is great. Life is grand. Life is good. Life is beautiful. Hey, 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 hey. There you go. See, I feel better already. So there's a couple of yens. I imagine you've been selling pig dog. Don't look at what I'm doing there. Well, see, let's go somewhere else. My life is complicated, I know. You should look at your weekly R1 and your monthly R1 on pig dog. Dr. Wayne, Barclays is calling for a 25 rate hike. Really? Let me log. If you want to do that, then all right. Let me log in. Hang on. I'll tell you. I'll tell you how the banks are positioned if you want. But don't tell anybody. It's a secret. Okay. What do you want? Barclays? I don't know if I have Barclays. I could tell you what September. Wow. No one's got trades in today. Huh. Look at that. That's interesting. No trades today. Morgan Stanley has a limit order long on the Aussie dollar at 74. So yeah, so they're expected. That's probably old news, right? Yesterday at 4. So I guess we could even talk about that just for fun. What is it, Aussie dollar? Hopefully I don't have any trades on this account on that. All right, well, don't look at that. I think what they're doing here, or what they did, when did the RBA minutes come up? I think it was yesterday about 8. Yeah, so I believe, so this is 4 p.m. So about 4 hours before the RBA meeting minutes came out. So we would have been sort of, 75.5, right? They put a limit order to buy at 74. Anyways, hang on. Yeah, I can't do this. Account's messy. I think maybe I should clear some of this off. Too many things going on. Hang on. Let's go back to yens. Too many hedging. See, I think the hedges complicate things. So anyways, okay, let's go back to what I was trying to communicate. 4 hours before the RBA meeting minutes came out, I think we were about, at that time, 75.50. Morgan Stanley placed a limit order long at 74. So they said, if the Aussie dollar falls, right, it looks like it was about 75. So if, this is what Morgan Stanley said yesterday, 4 hours before the news, if the Aussie dollar falls 100 pips, we're going to buy it. And their target was 77.00, and they had a 100 pip stop. So does that say they're chasing price, or have they made a decision before the news comes out? Monthly M2, there you go. Anybody trade the Kiwi dollar? Let's clear this up. Okay, there's a French bank, Crédit Agricole. You may know them. They shorted just below 73. They are short 72.92. So let's mark that up. They're short 72.92. So it might just be their calculation for a weekly central pivot. Okay, so they shorted there. And and their target is 0.700000. Wow, they're okay. So their target is monthly M1. It's not actually true, is it? It's actually 7.7000000. So they're not very good. I could tell you right now, right, that they didn't put it just above the monthly pivot. They put it just below, which makes no sense. And they're playing the psych levels. I would say just by that trade plan, they're not very sophisticated. Their stops at 74.85. So their stop 74.85. Once again, not a weekly or a monthly. So 74.85 sounds like it's just a little bit below 75. So their sophistication is, you know, they use psych levels. Guess what? They're losing money. All right, so don't work for that French bank. Royal Bank of Scotland. They sold USD yen. I think I got that one clear on this platform. All right, let's. I guess we can use this one. Okay. All right. Where did I go? Oh, Royal Bank of Scotland. They bought at 10. No, they sold at 102.39. 102.39. 102. Wait, that's a 1 minute chart. Hang on, Bubba. 102.39. Whoa, dude, seriously? Whoa, it must have been. What's the date on this? September 18th. Okay, 2 days ago. But look at this. 15 minutes before Asia opened, the Royal Bank of Scotland was trading the Asia Open. How'd you like to work in Scotland and trade Asia? All right, so let's go back to that. Let me, it's probably not the best chart to use. All right, let me use a cleaner one. All right, so 2 days ago, I don't want to do, okay, 2 days ago, right at the Tokyo Open, right before the Tokyo Open, they sold 102.39. Well, we want some pivots on here. So let me change the template. Let's go back for the 100th time. All right. 102.39. 102. All right. See? Look at that. They sold the weekly central. All right. Good job, Royal Bank of Scotland. All right. Credit Suisse sucks. Morgan, was it Morgan? No, Credit Agricole sucks. Royal Bank of Scotland, actually, you know, I get it. I may disagree with them, but I get what they're doing. I understand it. So let's dissect this a little farther. Sold it at 102.39 at the Asia Open on Monday? Yeah, all right, got it. Target 95. Say what? 95. Holy smokes. Let's dissect that. They're going for like an S3, I think. Anybody have a monthly S3? I don't have a monthly S3. This is their target, guys. Awesome. They might be stupid. Don't get me wrong. But like a true Scot, they're scared of nothing, huh? So it's even, wow, it's just like la la land. So that seems like just a Hail Mary, doesn't it? Sell it at resistance and go away. Holy smokes. Their stop is 105.20. 105.20. Oh, really? Holy smokes. That's all right. So they're playing the M4. Look at that. How cool is that? All right. So they're using the monthly M4 and probably, what would you call that? A monthly S4 or something? Wow. All right. So those are longer term trades, don't you think? Wow. Holy smokes. They're going to sit on that. Call it hope. Okay. And let's see if we got one more. Credit Suisse, they're a bunch of scalpers. Morgan Stanley. Look, if you don't use technical analysis, I don't even want to talk to you. Citi. No, they're out for profit on this one. Credit Suisse. Deutsche Bank hit its target. This is all last week now. Morgan Stanley stopped out. Credit Suisse. Deutsche Bank. This is all old stuff now. All right, well, that's interesting. I think the other interesting thing is no one's trading today. Amazing, huh? I think that's interesting. Let me just check a couple of things. So just looking at these banks, top performers, most trades right now have been USD yen. 41 trades for 601 pips. Second most traded currency pair is euro dollar. So they're euro dollar, dollar yen. On the euro dollar, they've made 31 trades and 549 pips. So there's a lot of losers on here. There's a couple of dumb trades. Who made these? What is this? Oh yeah, probably all the same. Société Générale. Oh my God, they took a bloodbath on that one. They bought it at 13.50 and got stopped out at 110. Obviously, that was a while ago, back in March. So that's all this year. So that's not a clear thing. Best trade of the year goes to Deutsche Bank. Deutsche Bank shorted Swissy yen for 1,005 pips. One trade, Swissy yen, Deutsche Bank. Good job. Now maybe your stock can go from $2 to $3. How do you have the? Oh, forget it, because I'm the most powerful person in the whole world. So anyways, nobody's trading right now, or they don't want me to know. But anyways, interesting, right? Interesting. I don't often talk about them, but I do. When I do, I want you to walk away with one thing: that these guys are not gods sitting at the top of their ivory towers controlling the world. Many of these banks are really poor traders. And that if you want to put some blood, sweat, and tears for years into this, art and skill that we do every day, you can beat them. There's no doubt. And I know that just from tracking what they do. They're not very good. Most of them are actually quite bad. Like you saw, Morgan Stanley doesn't even use technical analysis. They use psych levels. Hey, what do you want to do today? I don't know, buy it at 77-ish. Throw a stop around, I don't know, 75 and see if it goes up. Really? Did you even? I mean, it's funny, right? Like, really? That's what you do, Morgan Stanley? Like, I don't know, I don't know, buy it around 77 and see what happens, right? But also, when I went to the Chicago Board of Trade, and I was a bit nervous because I'm a currency trader. I'm self-taught too, right? So I don't know how confident I should be, and I'm going swimming with a bunch of sharks. I'm walking into the Chicago Board of Trade. I'm going to like hang out at the S&P 500 pit kind of stuff, right? Like, I don't know if I'm going to be like a kindergartner at like an NBA basketball camp, and the ball is bigger than my whole head and half my body, and I'm like, I can't make that shot. But anyways, I walk out that day, and I was just jazzed. I was jazzed, like, oh my God, I can compete and win against these guys. That's how I felt, honestly. I can compete and win against these guys. And I think I spent like a whole week writing a business plan for a hedge fund. Because I'm like, oh yeah, let me in, man. So if anything, if from time to time I share this type of information, remember it's secret. Shh. But it's to show that, you know, there are good players, there are bad players. Some know what they're doing, some don't know what they're doing. But you can compete, and there's nothing that they have that you don't have. They don't have privy to a secret. And in fact, I would say you have an advantage if you're trading your own money versus trading someone else's money. They have a bad day, they lose someone else's money, and they go to the bar and, you know, models and bottles. You have a bad day, you're like, "Don't! I hate working all day and losing money. Hate it!" And that gives you an edge. Anyways, peace on earth, may the pips be with you, may your profits be above average. Go get her done, guys. Go beat, go punish Morgan Stanley for being sloppy and lazy, loosey-goosey. Go get them. If they want to, right? If they want to throw their money away, then that's fine. Cheers.